global controls will have to be imposed, and a world governing body will be created to enforce them. Crises precipitate change.
Secretly plotting your demise. I want to devise a virus.
Hello everyone, Darko 2012 here with Global Government News, covering an article titled "Foreign Demand Falls for Treasuries." And the Chinese were getting rid of some of their US Treasury holdings. And this is the sign, guys, so check it out. It says foreign demand for US Treasury securities fell by a record amount in December as China purged some of its holdings of government debt, the U.S. Treasury Department said on Tuesday. China sold $34 billion in U.S. Treasury securities during the month. The U.S. Treasury said on Tuesday, leaving Japan as the biggest holder of U.S. government debt with $768 billion. China overtook Japan as the largest holder in September 2008. The shift in demand comes as countries retreat from the flight to safety strategy they embarked upon during the worst of the global economic crisis, and could mean the U.S. will have to pay more to service its debt interest. For China, the shedding of the U.S. debt marks a reversal that it signaled last year when it said it would begin to reduce some of its holdings. Any changes in its behavior are politically sensitive because it is the biggest U.S. trade partner it has helped to finance U.S. deficits. Alan Ruskin, a strategist at RBS Securities, said that China's behavior showed that it felt, quote, saturated with treasury paper and that this is the sign of a trend. The change of sentiment could come as a detriment of the U.S. dollar and the treasury market as the U.S. has to look to other countries for financing. Japan and the U.K. could pick up some of that slack in the last month, both added to their treasury holdings. However, the overall monthly sell-off of $53 billion was the biggest on record. The figures come as the White House grapples how to cut the U.S. deficit, which is projected to be $1.5 billion in 2010, or 10.6% of GDP. However, the move away from the safety of the U.S. debt is a sign of growing confidence in the global economy. Net purchases of long-term U.S. securities declined to $63 billion from $126 billion just in November. According to the Treasury figures, foreigners increased their purchases of U.S. equities, buying $20 billion in December after buying $9.7 billion the previous month. It says, however, Gregory Draco, an economist at IHS Global Insight, said that global appetite for U.S. assets remain relatively solid, and that the recent turmoil in European bond markets caused the Greek debt crisis meant that U.S. would remain attractive even as the dollar strengthened. A stronger U.S. dollar should not deter foreign investments as long as real GDP and productivity growth remain strong, he said. And he said separately on Tuesday, the National Association of Home Builders said that confidence among builders was on the rise this month thanks to signs of healing in the labor market. I don't know what figures they're looking at, but its index of confidence ticked up 2 points to 17 in February as the lowest rates and the extended home buyer tax credit improved conditions for buying. Builders are just beginning to see the anticipated effects of the home buyer tax credit on consumer demand, said David Crow, chief economist. Meanwhile, another source of encouragement is the improving employment market, which is a key to any sustainable economic and housing recovery, which I wouldn't, lose any sleep over this, or, put too much faith in what they're talking about as far as home building going up and the unemployment numbers. So, I mean, I don't know about you, but I mean, do you see a lot of people getting jobs or something? I don't. But yeah, these are little what do you call it, little red herrings or whatever when the Chinese start dumping U.S. Treasuries. So there's actually another article. Okay, I found this article titled "China: The world does not have money to buy more U.S. Treasuries." InfoWars Ireland, January 15th, 2010. And it says it is getting harder for governments to buy US Treasuries because the US's shrinking current account gap is reducing the supply of dollars overseas, a Chinese central bank official said yesterday. The comment by Min, Deputy Governor of the People's Bank of China, refers to the overall situation globally, not specifically to China, the biggest foreign holder of U.S. government bonds. Chinese officials generally are very careful about commenting on the dollar and treasuries, given that so much of its U.S. $2.3 trillion reserves are tied to their value, and markets always watch any such comments closely for signs of any shift in how it manages its assets. $2.3 trillion. I think, what is our GDP? To like 12? Okay, yeah, it says 14.4 trillion is our GDP currently. Well, not currently, but this is a 2008 estimate. China's State Administration of Foreign Exchange reaffirmed this month that the dollar stands secure as the anchor of the currency reserves it manages, even as the country seeks to diversify its investments. In a discussion on the global role of the dollar, Zhu told an academic audience that it was inevitable that the dollar would continue to fall in value because Washington continued to issue more treasuries to finance its deficit spending. He then addressed where demand for that debt would come from, and he says the United States cannot force foreign governments to increase their holdings of treasuries. According to an audio recording of his remarks, quote, double the holdings? It is definitely impossible. The U.S. current account deficit is falling as residents' savings increase, so its trade turnover is falling, which means that the U.S. is supplying fewer dollars to the rest of the world, he added. The world does not have so much money to buy more U.S. treasuries. China continues to see its foreign exchange reserves grow, albeit at a slower pace than in the past years due to a large trade surplus and inflows of foreign investment. They stood at US $2.3 trillion at the end of September. So there you go, guys. And thank you for checking this video out.